We've all heard the rhetoric from the left and from the mainstream media or the legacy media. Trump's tariffs, it's a tariff war, it's a trade war, it's going to ruin the global economy, going to ruin the economy here. Prices are going to soar through the roof. Inflation's on the way up. We're in dire straits. And suddenly, none of that's true. It is Vance Ginn, he's the former chief economist over at the Trump White House, and he's got some insight on all of this. Vance, how are you, first of all?
Hey, Joe, I'm doing well. It's warm, but other than that, I'm doing well.
Yeah, we're smart enough to live in the state of Texas, the free Republic of Texas, but eventually we knew it was going to get hot. We're in triple digits today for sure. Let me talk to you about a couple of things. Let's just start from the numbers we got yesterday. Inflation was expected to go up 0.3. It ended up going up 0.2. And you see people like Wolf Blitzer on CNN going, obviously some good news in the economy. It's like they're very upset that it's not as bad as it could have been. We had an average economy now, or an average inflation rate under Trump in both the first and the second term so far, about 1.9. The average was 5 under Joe Biden. So what do you point at as to why the inflation went down, even though there are some trade negotiations going on right now? What caused that, do you think?
Well, I think part of it has to do with the Federal Reserve. They've been cutting their balance sheet for a little while now. And so some of that money is coming out of the economy, although there has been an increase in the money supply here recently. But also, Joe, when you increase the supply side of the economy, if you just remember back to your demand and supply charts, we won't get into too much economics, but you increase supply, you get lower prices. And so what we've seen right now is a huge increase in investment of supply and inventories in the first quarter that was reported in the real GDP numbers. Even though it showed a contraction of 0.3%, there was a 22% increase in investment. And so a lot of that increase in supply helps to bring down prices, which is ultimately what I think the Trump administration wants. And one of the things, too, about the trade wars is that it's kind of been on again, off again. It's more uncertainty. However, those higher costs haven't really hit the way that many people expected because there have been pauses, there have been suspensions and that sort of thing. So hopefully there will be less of these trade wars and more pro-growth policies. That was part of the first Trump administration because they're already doing a good job on the deregulation side. Hopefully we'll get the Tax Cuts and Jobs Act to be passed soon. Those are the types of things that I think will really allow for the economy just to boom.
Vance Ginn, PhD, former chief economist of the Trump White House. VanceGinn.com is the website. So we're watching the legacy media and the left. Now, I know that you don't love tariffs. You and I have talked about tariffs a lot. But Trump puts the tariffs on. They complain he's doing a trade war. He's going to ruin the global economy. Then he takes the tariffs off when he makes a deal. Oh, look, he caved. He caved in. Like what do they want? They want him to do the tariffs and stick to it? Or do they want him to do the tariffs and then get rid of them once he uses the leverage properly, I think, and he wants the other countries to deal with us fairly. So why would taking the tariffs off be a bad thing? Going in, and again, I know that you're not a huge tariff guy, but you and I agree that he's doing it for leverage, and he doesn't really want to leave tariffs on for good and charge China 145%. He wants them to play ball with us.
Yeah, no, I think there's a lot of truth to that, Joe, and hopefully that will continue. One of the things that I've seen, even from the UK trade deal, so we had this new US-UK trade deal, the tariff rates are higher underneath this deal for the UK and the US. However, it does bring certainty, right? So whenever you have an expectation of profitability for firms, what they base it on is what they expect their cost structure to be for the future. And so if you can at least price in what it's going to be, and now we seem to have that deal with the UK, even though there are higher tariffs from both countries, by the way, apparently that's still a more profitable way. And so I think what we're seeing here is let's see what works and what doesn't. And that's part of the competitive process. This is one thing I hope, Joe, that you and I've talked about is, yes, I'm a free trade guy. I don't want tariffs. I'd rather them not be a part of the bargaining chip for the negotiating the new deals. However, I've always said, too, that if we can get to a place where this is going to work, then I'm glad to be wrong because I would like what I want people. I want people to prosper. I want there more economic opportunity for people. And so let's see what happens. But so far, to your point, whenever they started to rein back in some of these tariffs that have been on China or other places across the globe, what we've seen is the stock market has boomed. We've seen more economic growth. And so I think if we can keep that going, and Trump loves that too, right? I know that there's some talk about don't look at the stock market today and things of that nature. But over time, President Trump definitely will want to look at what the markets are showing.
It is Vance Ginn, PhD. Go and follow him at Vance Ginn over on X. So when it comes to the Chinese pause that we have right now, we went from 145 down to, I think, 20 or 30%. They went from 125 down to like 10%. That's what it's going to be for 90 days. What is the
Yeah.
hope here? Do you really think China's going to open its market to our stuff? As you know, I've been there, adopted my daughter Gia from there. There aren't any American-made products in China, period. There just aren't. And if there's something that says General Motors, they made it in China. They didn't make it over here and then send it over. I guess they're sending us 10 to our 1 that we're sending back when it comes to trade and products. Are they really going to open the market to American products, do you think?
We'll see. I mean, if you remember in the first administration, which I was there when all this was going on, but in early 2020, before the COVID situation happened, there was a trade deal between China and the United States under the Trump administration. And there were certain provisions that they were supposed to hit a certain amount of exports from the United States, meaning they were importing and things of that nature. And some of that started to take place. Then, of course, COVID threw that all out. So my thought is that they will get something very similar to what was then, and allow for there to be more trade between the countries. And to your point, China is a communist country. And they don't have to worry about elections from one year to the next or every couple of years. They can do what they kind of want to do to that extent, which is one reason why I think that at the end of the day, their economy is going to fail. That's what we've seen through socialism and communism time after time again. But in the meantime, what I think what would be best for them and for us is if we could come up with lower trade barriers overall. Now, do I think China's going to do that overnight? No. But
Right.
what I've seen from what happened during the first Trump administration is that they were willing to make some exceptions, make some agreements. Now, I question whether or not they were actually going to do anything, whether COVID happened or not. That's just my kind of, I just don't trust them. But at the same time, if we can get something along those lines, that would be a much better situation, just like the US-UK trade deal or even the USMCA, which had, there were some more restrictions in USMCA, even compared to NAFTA. But what it allows for is more certainty and more expected cost structure for businesses. So that way they can be more profitable. And that's what I hope we could see with China as well.
It's Vance Ginn, PhD. Back in the 70s, China was like a third world country. Isn't there an argument to be made that we deal with them so much and we accept their cheap goods so much that we've actually profited? We have propped them up, and we have given them the ability to be this almost superpower that they appear to be becoming. They literally, when we normalized trade with them and then made them most favored nation, which made no sense, we allowed them to grow this socialism / pseudo free market / it's some hybrid crap that they do over there. If we are tough with them and don't accept 10 to 1 as the going rate, 10 they send to 1 that we send back, couldn't we at least weaken them a little bit? Because economically, they're very strong because of us. We're 34% of the entire global economy. If we back off of what we allow them to do, maybe their workers get better health care and better and a better workplace. People aren't jumping off the buildings. They literally have nets there on the side of buildings now that you probably know about to catch people so that they don't jump to their death. Can't we force them to at least be more humane? Can't we force them not to be this bad actor that they are if we limit how much money they can get from us? Is that too lofty a goal, do you think?
No, definitely not, Joe. I mean, that's what I hope that they can be. I mean, I think we want them to be a good trading partner. I mean, at the end of the day, they've got 1.4 billion people. We've got 330 million people. So if we could tap into their market, that not only expands the size and scope of our consumption market, that they could buy our goods and services, but also production. If we can get quality, affordable goods from them. But it's tough. I do think that we saw some market-driven expansion in China. When you think about 1978 was when they had kind of the opening, the revolution that took place with Deng Xiaoping and others. And then that allowed for there to be more growth in their economy than they had ever had before. Really, the step back away towards communism and more towards socialism in that sense really was President Xi. I mean, this has been over the last decade, they've really moved in this direction, which I think is a horrible direction to go into. And one of the things too, Joe, that you and I've talked about is, I'm also concerned about our country, that we become much more too socialist. There's usually this mixed economy idea, but when you think about the commanding heights of the economy, healthcare, education, transportation, you go through the list, the number one kind of consumption or consumer of those products is by government, which meaning the taxpayer funding the government to fund healthcare, to fund education and transportation. And that should really be done more in the private sector compared to the government. And so I think we've got to be careful here at home as well about our national debt. I think that's our largest national security threat entirely because of the amount of interest that we have to pay, the higher taxes, and it makes us weaker on the global playing field with countries like China that don't like us very much.
It's Vance Ginn, PhD. Go and follow him. VanceGinn.com is the website. Former chief economist in the Trump White House the first time. So one big, beautiful bill. If you're sitting at the table and they say, hey, Vance, what do you need in the one big, beautiful bill? What do we have to see in this bill? Because as beautiful as it supposedly is, we're starting to hear some mumbling and rumbling out of the House of Representatives about, well, how do we pay for this? And how do we pay for that? And what do we do with this thing? So you're sitting around the table and President Trump says, Ginn, what you got for me? What do you need in this bill?
What we need is to make the Trump tax cuts permanent. Period. That's
for everybody,
goal.
Right? Because there's
everybody.
Because suddenly we're going to start, taxing the rich higher, and then they say we're not going to tax the rich higher. We can't do that. You can't start taxing people higher and pretend like you're a conservative and fiscal responsible government. Go ahead.
Exactly. And two, Mr. President, you've already said that you're not going to raise taxes. And Americans for Tax Reform, Grover Norquist, where I'm a staff economist there, he signed the No New Tax Pledge. And so I think these are the reasons why you don't want to turn to George H.W. Bush, where you raise taxes,
exactly right,
and lost the election and everything else. We don't need that. And right now we need more certainty in the economy. And that would come from extending and making permanent all the tax cuts that are individuals and on the corporation side. I would also suggest that they keep pushing for lower corporate taxes. And I think the full expensing, where if you buy capital, you should be able to expense it right then and not have to wait over time. That full expensing, I think, is also huge.
Right.
These are some of the big parts of the bill. There are some other parts that I think, we could maybe do without by doubling the child tax credit and some of these other expenditures. But at the same time, I do think it's important, like friends like my friend Chip Roy, who talks a lot about the spending part of it. I do think that there must be a focus on spending. And that looks to be, so far, Joe, what part of reconciliation is to maybe find $1.5 trillion in cutting spending, or at least slowing the growth rate of spending. And that includes Medicaid reforms. Medicaid is not Medicare. It's not Social Security. It shouldn't be a quote unquote entitlement. It's a welfare program. And it should only go to those who really need it, who are the poorest among us. And unfortunately, it's not. It's going to a lot of people with higher incomes, higher eligibility than otherwise should be on this program. And more money is actually going to people who are able-bodied or work-capable adults compared to those who are disabled. $9 for a person who's work-capable to only $1 that's going to, for 9-to-1 sort of discrepancy here. That's not the way the Medicaid system is supposed to work, and it's too costly for taxpayers. So those are the types of things that I hope that they can get in this big, beautiful bill. And one more thing, Joe, is they should get rid of all the IRA, the green energy scheme, all that tax credit stuff and everything else that's in there, and subsidies for green energy. We've got to get rid of that as well.
It is Vance Ginn, PhD. Go to VanceGinn.com. Go follow him at Vance Ginn. When I take a look at what we're trying to do, I'm not sure I understand why we can't go back to pre-COVID spending. Why can't they press a button and say, let's go back to $4.5 trillion, whatever the hell it was, because they added a trillion and a half, $2 trillion. The pandemic was over. That's what Joe Biden said, like 3 years ago. Why didn't we go immediately back to pre-pandemic spending?
Oh, man. That would be beautiful. Yeah, that would be beautiful. You're exactly right. We were at $4.8 trillion when I was in there in 2019. Now we're at $7 trillion.
What the hell?
So we should be cutting we should be cutting $2 trillion out of there. And so unfortunately, there's not a button you can push. And the big problem here, Joe, is that there's too many interest groups. Everybody now wants a piece of that money. And the bureaucrats, they want more of that money. Fortunately, Trump has been able to come in and they've been able to reduce a lot of the federal government employment by 77,000 or something like that. But there's still a lot of bloat that's there. But what that does is it creates budget inertia, is what I like to call it. Whether it's the interest groups or the inside bureaucrats, they want to keep the budget going because they don't want to lose their slot of pie, their slice of pie that's out there. And that's really what we need to start doing, because we're spending way too much. We don't have a revenue problem. We've got a spending problem.
Vance, what I don't understand is, what was that stuff supposed to do? What does the extra $2 trillion do? Because if it was just about getting, these personal protection items like masks and stuff like that, if it was to buy vaccines that aren't really vaccines, if it was to provide education on social distancing, which was made up by Fauci, I mean, what is that money doing now? We're just rolling it over. Yeah. What does it do if we don't have a pandemic?
Well,
do we know?
It's a great question. No, yeah, well, I part of it will not be spent. And that's why, like Russ Vought, who was my boss back in the day, he's at OMB now, they're looking at a sequester. How can you sequester some of these funds that haven't been spent and just not spend them? And that's probably going to go to court, and it's probably going to take a little while to get all that going in. But I think that's what we need to look at between that and the impoundment. If you could impound these funds as well, then that would also keep them from being spent. But the other part is some of this money is fungible, though, Joe. So they could they could put it wherever they want to some extent. Now, it has to be within the law, but they can make it to where it fits in a certain part of the law to fund different areas. And so they always find other ways to spend our money.
So if there's $1.5 trillion, $2 trillion laying around, if it can be impounded, it goes back to the Treasury. If you do sequester, what happens to it then? Same thing? Treasury gets it?
Same thing, because they just cut it. And it doesn't really go back to the Treasury. It just means that they don't spend those money. So instead of us having a $2 trillion deficit, if they cut all of that, then it would be zero. We wouldn't have any deficit.
Well, I'd be pretty happy with zero.
The spending. Me too.
So who has the right to reapportion it? Is it the House?
Yeah. Congress is going to have to get involved, and
we're not getting the money back. We're not getting it back.
Yeah, I know. Yeah. And, and you brought this up a lot too, like Doge. I mean, Doge was great, right? Elon Musk coming in, do all this great stuff and exposing all the fraud, waste, and abuse. But, they found about $165 billion, which is nothing to sneeze about. I wish I had that in my bank. But at the same time, it wasn't the $2 trillion. And the reason why is because, just like we're talking about here, it's very difficult to come in and just start slashing things, even if you're intended to do so. And so ultimately, it's up to Congress. Congress has the power of the purse. They've got to control this, and they've got to get spending under control, or we're not going to have a country as we know it to be able to fight China, to be able to counter other things across the globe.
Vance, last question, and I really appreciate the time, maybe 30 seconds or so on this. Why can't we force them to spend less? I have to spend less if I don't have enough money to cover what I'm spending. They literally have this ideology that we need to get enough money to spend what we want to spend, instead of saying we need less money because we're going to spend less money. How do we make them do that?
Well, number one is elections. Elections matter,
right.
But of course that doesn't always work either. I mean, I really think we need a constitutional convention that has a Chapter 5, right? Constitutional convention that can allow for us to have a balanced budget amendment, Article 5 convention. Now there's some pros and cons to that. But I do think that there should be some sort of fiscal rule. I'd like a spending limit that just forces them to not grow more than population growth plus inflation if they're going to grow at all. But we need more rules. We have rules on the Fed to a certain extent, although they need more monetary rules. We should have spending rules. At the end of the day, Congress or the president cannot control the revenue. They can only control their spending. And that's why spending is always the problem.
Vance Ginn, PhD. It always flies by, Vance. We appreciate the time. Go to vanceginn.com, or also follow him at Vance Ginn on X. Thanks for the time and the knowledge, brother. Always appreciate it.
Thank you so much, Joe. Have a great day.
Man. You too. We're back after this. Stay right here.